we are going to go into a recession. And then you have to say to yourself, okay, when was the last recession where the economy actually got itself out of a recession without stimulus? And it's been so long. I don't even think the market and investors even remember a period like that. If we are entering that new phase, or that old phase that is now new again, it's going to be problematic. I don't see the S&P making new all-time highs, honestly, for like 10 to 15 years from where we were in 2021. And I know that's crazy to say, but if you look historically, look at the dot-com bubble. The NASDAQ didn't make highs for 15 years again. And it's very common when you get these big bubbles, and we saw credit bubbles, we saw, all these type of bubbles, including in crypto, that it takes a long time for the markets to digest that once it collapses. For the S&P, Dow, and NASDAQ, I'm expecting 2023 another 25% down, and I could easily see down total 50+% before all is said and done here. Then I think it's going to be a long, slow climb out of that mess, because even once the Fed starts stimulating, they're not going to be able to stimulate like the olden days where they just go nuts.
If you want to see more videos and interviews like this from influential people in tech, finance, and sports, subscribe to the channel and make sure you hit the bell to be alerted. And go a step further and join the YouTube and membership area for early releases of videos like this. I'm out of here. It's your boy Crypto Blood, and welcome to another Kick in the Session. I've got one of my favorites coming back on with me today, Gareth Soloway, aka Turbo Trader. What's going on, bro? Before we went live, I was telling you it's been like almost 3 months since I had you on, which is crazy. But we didn't have an FTX situation, so this is now us being able to, go over the crypto markets in regards to what is going on with FTX and how it will affect the crypto markets, in addition to the TradFi things that are going on with the interest rate hikes and QT and all of this stuff. We're going to talk about all that today with Gareth. You can find Gareth, or at least I follow him, on Twitter. I'll have a link in the description below. Gareth Soloway, thank you for joining me again today, man. How are you?
Oh, I'm doing well, buddy. Thank you so much for having me back. It's always good to chat. And yeah, a lot can happen in 3 months, can't
it? Man, oh, you're telling. So let's start off with how I usually like to start it off with, and that is kind of from the TradFi macro standpoint. We had 2 days of essentially about 1,000 or 1,100 point move in the wrong direction for some. If you're short, then it's a great move for you. You're looking very good going into this Christmas. But the Dow Jones down 200 on Friday, and then I think the day before it was down 700. It closed down 700. And this is off the backs of the FOMC meeting, right? It took a couple days for the markets to digest it, but they finally came to their senses. Kind of go through last week and what your take is for how the markets interpreted everything right after the FOMC.
Yeah, so I think, going into the FOMC decision, I think everyone was kind of on that 50 basis point hike track, which turned out to be correct. But I think the markets were really kind of inching up in expectation that the Fed would say, hey, we're just about done with our rate hikes. And the Fed just didn't do that, right? The Fed came out and basically said, hey, listen, we may have to still continue to hike significantly. And that was just obviously the wrong thing that the markets didn't want to hear. Now, I think it's important that investors realize that, like, the Fed had to be hawkish, right? They can't, if they came out and said, oh, we may be close to being done, the S&P would have rallied 3%. And remember, the Fed doesn't want the stock market or asset prices up. The reason they don't want asset prices up is because it creates what's called the wealth effect, which then creates inflation, or will hamper inflation coming back down. So in all fairness, I don't think we should be super surprised that the Fed remained hawkish, but at the same time, the market didn't like it, and we've seen a lot of selling since then.
Why were the markets surprised? Because and also to that, additionally, why was there a 1 day delay on that? I interpreted, I did a live stream on the FOMC, and I took it as though the market should have tanked a lot more than it did.
Yeah.
It didn't go up though. I don't think it really ended on a green day for the FOMC. I can't remember, but I don't think it did. But it didn't tank like I thought it should have.
It was only down a little bit that day, in fact,
Right.
and I agree. I mean, I think I, along with many others, were scratching their heads and saying, why didn't we sell off more? And then it was this 1 day delay reaction where we then sold off heavily. And the only thing I could kind of think of is that you had a lot of people that had big short positions going in. We saw the VIX go up prior, which, remember, when the VIX goes up, it's people buying protection. So essentially, they were buying puts, they were buying ways to protect themselves in case the markets collapsed. When the Fed made that statement, I think initially there was kind of like okay, they were hawkish, but, let's still cover our shorts because the market's not collapsing. And it kind of kept the market up for 1 day. And then once we saw that get out of the way, then it was down, down, down in a major way. But yeah, I mean, that was really interesting to see.
Yeah, I had Nick Santiago, your
Yeah.
co-founder, on for the first time. It was a great conversation.
Nice.
We talked about the VIX, and I had him on, I think, on Wednesday, I believe. So it was the day of the FOMC, and we talked about the VIX, and I said, "Man, Nick, is it strange to you that the VIX has not been tracking how it normally has in the past? Is the VIX broken, or are markets broken?" And it's funny because he thought the same thing, but then Thursday and Friday we saw the VIX go up like 8% Thursday.
Yeah.
And then Friday, I think it I don't know what it did Friday, but it jumped hugely on Thursday. What's your take on the VIX? Is it a proper barometer still for the markets, or is there something deeper we should look into with that?
Yeah, I do think the VIX is still a proper barometer. I think there are periods where it gets a little skewed because the market is very keen on kind of buying protection going into these big events. So the FOMC decision, that kind of action, you saw just before it was kind of going up. But then the day they announced, like you said, the market didn't really sell off. The VIX actually sold off that day.
Exactly,
The next
sure
day,
did.
right?
I was
So
very
the
confused when
one
I
thing I
saw
would
that.
say too is I think it's important to recognize that you can also look at what's going on in crypto, and I also think that that's playing a little role. Like we've seen a lot of this kind of like, I mean, there's been some major battles being fought, between Binance and FTX, and who knew what, who put who out of business, and then you have people like Jim Cramer coming out and ripping Binance. I mean, I've seen some crazy stuff, and I think that unease makes people and investors very uneasy, where it's like, okay, well, yes, that's crypto and related to crypto, but can it potentially bleed over into the asset markets, the stock market? And I think that's kind of one of the little caveats that no one's talking about that probably does have some play in the stock market.
Interesting. I didn't really think that it did. So it's interesting that you feel like it does. Just, I guess, because it's such a small market, I didn't think it would have that big of an impact. But
Yeah, I
I
think
guess when you have rehypothecation leverage, and then you have, that's where you start to see how it could manifest a little bit bigger in TradFi.
And I,
Because
and
you
I think
have
that's what it is, right? It's that the crypto market itself is not big, but it's these bad actors making bad decisions. It's then how many big players, like there are hedge funds, like we knew hedge funds were invested in FTX that now took a hit. And then does that make them then have to sell equity stock positions because they have
exactly
to cover losses in the crypto market? And then when you have people like Jim Cramer and other players that are very much
Mr.
in the stock
Wonderful.
market, and they start attacking, it just makes people very uneasy. Like, what's the real story here? And it makes investors, I think, just wary, and makes them more likely to kind of step back from all assets in total.
Will we have a Santa Claus rally? I mean, we got a week left or so this coming week, short week.
Yeah.
Will we have that Santa Claus rally that we typically have
Well,
every year or so?
I don't know if so. I don't think at this point we're going to get a major Santa Claus rally. But if you look at the S&P 500, it's down so sharply in the last 3 days from I think the CPI number is where we had that monster gap up, and then we just
Yeah,
reversed. And from there we had the FOMC, and then Thursday and Friday sell off. So I do kind of expect at least a little bit of a bounce at some point this week. But I don't think we're going to get that big Santa Claus rally. I also think that there's a lot of big stocks that you may see some kind of tax loss selling on into year end now. I mean, we have this last 2 weeks. If people are going to sell and kind of offset gains, if anyone has any gains, this is where that's going to happen. So, I mean, even Apple's down significantly. You could have some tax loss selling in Apple.
yeah, yeah. I didn't think about that, and I used to talk about that a lot in crypto. Every year we would see a little sell-off at the end of the year. People
Yeah.
locking in either gains or locking in losses so they can deduct those a little bit. Before we get into crypto, though, Gareth, I want to talk to you about this article out of Zero Hedge, and just the title, Why Central Banks Will Choose Recession Over Inflation. And I have to agree with this. I would love to hear your opinion about this. Do you think central banks will pick a recession over inflation? Is inflation a bigger danger to them than a recession?
Yeah, I do think at this stage, and I think it's all degrees, right? So if you're talking about a minor recession or a mid-level recession, absolutely. Because I think one of the things that's become very, very clear is that when you get interest rates low, like we've seen over the last 12, 13 years since 2009 from that financial crisis, the people that benefit are the wealthy, the people that have investments, and then who suffers, right? Well, the people that don't have investments aren't making that money. When you have inflation, the wealthy can tolerate that inflation. Anyone middle class, lower income can't. And I think there's been this big push from a political bias, and the central banks are feeling that pressure where it's like, listen, you have to not make the rich richer. You have to take care of everyone else because inflation is really crushing them. So I think a minor recession is what the Fed is fine with. I even think a mid-level recession. But having said that, if we got into kind of a depression-ish type scenario where, if you got inflation, unemployment over 10% or north of that level, then I think there's a bigger, pull there for stimulus again.
So do you think though, I know you're a trader, I'm a trader as well, but a lot of the viewers are not so much of an active trader. They're more investors. What would be your take on the next 2 to 3 years?
Yeah.
I saw something about how since 2008, it's been 20 billion or $20 trillion worth of stimulus. Do we revert back to the mean, like almost how we had? I can give you an example or a comparison. So all the stimulus money that we had pushed into the markets during COVID, right? We've pretty much like reverted back to the mean.
Yeah.
Before COVID. Do we see that same scenario happen in a broader cycle where we essentially revert back to the mean of 2008-9, give or take, whatever GDP growth we would have had between 2008 and 9, but revert back to some mean back there?
Yeah, so I actually do think that we have to revert back to that mean. So you have these expansionary periods of the balance sheet of the Federal Reserve, the U.S. debt. We know all this printing of money has gone on, and there's no doubt that now the inflation bug is here. And I'm a big believer that the inflation side of things, it's not going to go away anytime soon. Now, again, when you look at where inflation was, 9% or so, dropping from 9 to 5 is probably the easy battle. Dropping from 5 to 2 or 4 to 2, that's going to be where it's really hard, and it's going to take a lot of effort from the central banks to get that down. And I think that's going to really put them in a box where we are going to go into a recession. And then you have to say to yourself, okay, when was the last recession where the market, the economy actually got itself out of a recession without stimulus? And it's been so long. I don't even think the market and investors even remember a period like that. And so if we are entering that new phase or that old phase that is now new again, it's going to be problematic. I don't see the S&P making new all-time highs, honestly, for like 10 to 15 years from where we were in 2021. And I know that's crazy to say, but if you look historically, look at the dot-com bubble. The NASDAQ didn't make highs for 15 years again. And it's very common when you get these big bubbles, and we saw credit bubbles, we saw, all these type of bubbles, including in crypto, that it takes a long time for the markets to digest that once it collapses.
Yeah. And, I was actually pretty shocked to hear Jerome Powell at the press conference make mention that, oh, no, 2% is still on the table. We're not even thinking about raising that no time soon. That's not even in the conversation. So that to me was yet another knife in the markets, right? I'm like, ooh, yeah.
I think it's important to recognize, like, he can't say like, hey guys, we're okay with 3%, right? If he starts that sliding scale, then all of a sudden the markets lose any sort of, or the Fed loses that credibility. So do I think that if we got to 12% unemployment, would he be okay with 3%? Yes, I do. But he can't say that. It would be like I mean, it's like your parents like saying like, oh, don't do that, and then you do it, and they're like, oh, it's okay. Here's a candy bar, anyways, right? I mean, like the Fed can't do that at this stage, but I do think that there's always a breaking point for the Fed where like even 4% inflation. What if we had a Great Depression with 25% unemployment? Would the Fed still be like, no, we can't stimulate even with 25% unemployment? I don't know.
Right.
It's
Right.
hard to know.
I hear you, and that's a good point. That's a good point. But I think, okay, so if you think that's a bluff, where do you really think they're going to end up? Is it 4%? I'm hearing like the 4 or 5% range.
Yeah.
Where do you think we actually end up having the new normal for inflation?
I think it's probably around 3%. I think 3.5. That'll be the new kind of reality of things. And again, I don't even think we get down to 3% for another year or two. But I think at that point, the economy's in such a bad recession that the Fed will say, you know what? People are really suffering out there. We have to do some sort of stimulus. We have to lower rates, even with slightly elevated inflation at this point.
So with that scenario, Gareth, where do you see the indices? Where do you see the Dow Jones in the next year or two-ish?
I mean, for the S&P, Dow, and NASDAQ, I'm expecting 2023 another 25% down, and I could easily see down total 50+% before all is said and done here. And again, then I think it's going to be a long, slow climb out of that mess, because even once the Fed starts stimulating, they're not going to be able to stimulate like the olden days where they just go nuts. Because again, inflation is already going to be elevated, right? We're not at 1% or 2%. We're at 3.5%. And so they'll be able to do a little bit, but it's going to take a lot of time for those equity markets to get back to all-time highs. Having said that, I actually think Bitcoin will be that alternate asset once we get regulation, where you actually can see some really good upside in the next 3 to 5 years in that asset because of clarity and kind of this new regulation coming into the space where money will start getting attracted there.
Interesting. So that segues us into crypto.
Yeah.
Boy, oh boy. Again, it's been a while since I've had you on, and we did not have FTX. We couldn't even think that would be a problem. I never traded on the FTX. I don't know if you have, but I did know it was one of the bigger platforms in the space. The who's who were promoting it.
Yeah.
They were on the Miami Heat's stadium and all this stuff, right? Boom. Now we have this happen. Wow. Where do we go from here? Do you see more contagion coming? If so, how does that impact crypto in just the near term? I'm talking about the next 2 to 3 months. I think are very critical periods for us in crypto.
Yeah, I think the next 2 to 3, even the next 4, 5, 6 months will be tough for crypto. There's no doubt that there is contagion. I'm sure there's hedge funds out there that have still exposure. There are players out there. I mean, even look at someone like a Michael Saylor and MicroStrategy, and I know he keeps on kind of lowering his like level where they're stressed on how much Bitcoin that they have. But I mean, if we go down to 10,000, 9,000, where's that breaking point for his and MicroStrategy's investment? Because they did borrow money to invest on that. So you think you have to kind of look at it in that way too, where there's bigger players that are involved here that you could have create an issue within the crypto markets. Now, for me, I think the biggest thing right now is yes, we'll see further kind of contagion, although I'm hopeful that FTX turns out to be the biggest one. But I do think this is the final leg down. In fact, if I show my chart here, let me just bring up my chart real quick. There's some really interesting stuff that is worth noting when it comes to the charts, right? So you could see that this was the Terra Luna collapse right here, and Bitcoin fell about 45% with Terra Luna. If we look over here, this was FTX. Bitcoin only fell 25%. Yet FTX, you could argue, was a bigger debacle than Terra Luna. So for me, That's interesting, right? Because it shows maybe a positive divergence in Bitcoin. Now, it doesn't mean Bitcoin's bottoms. I still think you're headed down 12, 13,000 major support, and then probably maybe 9,000. But I do think you're on your last leg lower. In the next 3 to 6 months, I think Bitcoin does bottom, and then it may take some time to kind of get its legs back. But I think that's going to be the key. And I think, again, you look at, for me at least, I'm looking at this on Bitcoin specifically as a accumulation move to the downside.
Right. Dollar cost averaging in. That's the best bet for most investors. That's a good point. I never looked into those measured moves down and how they were they were smaller
Yeah.
between Terra Luna and FTX. What about Grayscale though? And I brought this up on Around the Blockchain. And the panelist Nick didn't know at this point. I'm like, Grayscale is the biggest holder of Bitcoin. I think around 3% of the supply. If they have to go bankrupt, isn't that a forced liquidation move for them with those Bitcoins? And what does that look like for the market? I think that's the last shoe to drop as far as the biggest washout to me if Grayscale goes under. What are your thoughts about Grayscale, Digital Currency Group, and
Yeah,
so
I mean,
forth?
so I think you're right on that. Is that GBTC, which is the Grayscale Bitcoin Trust, I think it's trading at about a 50% discount to Bitcoin at this point. So there's definitely, that's the market telling you something's wrong. Now, having said that, I don't know the inner workings. I know the way that the fund works makes for that disparity to occur. I don't know how much stress they're feeling on it, but it's certainly, that would be, I mean, huge. That would be an earthquake of epic proportions considering how much Bitcoin they own. And then again, do they have to unload it? So again, I know Grayscale has approached the Fed to say, hey, can we adjust this to trade it more like an ETF so it trades more in parity to Bitcoin spot price? But so far the Fed is like, the SEC is like, nope, you can't do that. And again, my guess is that could change when we get regulation. They might say, okay, we have regulation, we have transparency now. Now you guys can have basically a spot ETF. But right now, you're right. I mean, that is a potential black swan type event.
Yeah, I'm. That's the last thing I'm concerned about. I can't see anything bigger than that at this juncture, other than the FTX situation.
I do know. By the way, I do know that Cathie Wood is still buying GBTC.
Yeah, she is.
She just
she bought some more this past week.
Yeah, last week she was just loading up on it. So, I mean, I don't know. She might have better information than me, but for me, I'm all about if I'm going to buy, I'm not going to buy the GBTC. Maybe I'll regret that. But for me, I'm sticking with spot right now and just literally dipping the toe in the water right now.
Exactly. It's an interesting thing though, because this is an experiment we did not get to see in 2008. And what I mean by that is there was no lender of last resort. There is no lender of last resort in this scenario today. So I think it's actually a great experiment for us to witness, and we won't have a bailout. So tell us, where do you think we go from here? Yeah. What's your take on FTX and Sam Bankman-Fried? I'm sorry.
Yeah, so I mean, number one, he's got to pay the price, right? And I was glad to see that he got arrested. He claims he didn't realize, but I mean, reality of it is, I think he had to know something was going on there that wasn't quite on the up and up. So he's got to be held accountable. And again, I think that especially when you're the CEO, if stuff happens on your watch and you're supposed to be in charge, you kind of have to be held accountable. So I'm glad to see that he was arrested. Again, it's a matter of, this is I know it sounds, and you're right about this, there's no lender of last resort in crypto. But at the same time, when you look at the .com era, when you look at the financial crisis in 08, 09, there were the same type of things, right? I mean, think about Enron, WorldCom. I mean, these bad actors in the stock market doing really shady, total frauds. I mean, you have Bernie Madoff, right? And when bear markets occur, that's when they're exposed. And so you're seeing, the positive is you could look at this as it's washing out all the bad stuff. So whatever's left over, if there is anything left over, hopefully it is stronger for that and cleaner for that. For me, I liken FTX to kind of a Lehman Brothers collapse, where you had these two big entities. One in that bear market collapsed, and then interestingly enough, the S&P 500, it took about 6 months for it to bottom, and it dropped another 45%. So I kind of am using that as my guidepost for where I think Bitcoin could bottom. So, you look at from FTX's collapse 6 months out, and then about 45% downside, which actually puts us right around just below $10,000. So for me, 10K is kind of my level in the sand, or just below 9,000-ish. And I'm kind of eyeing maybe May-ish or June when that bottom could be. So again, just kind of doing our best here to navigate this wild market. But for me, that's kind of my angle on it. Look for sub 10,000 and maybe around 6 months out.
Yeah, that sounds good. I think that's my gut is feeling the same way. I like that number, $9,000-$10,000, if give or take. If you miss a few percentage, hey, but you're still in the ballpark, right? Yeah. As far as grabbing those cheap Bitcoins. Oh man, any last words, man? What is your strategy going into the finishing the new year or finishing this year out going into 23? Are you kind of taking it easy? Or give us some of your trading tips, if you would.
Yeah, so I think for me, it's just kind of playing it safe as more of a trader right now. It doesn't mean I'm not, I'm looking at some crypto options, some stock options, and I'm not saying options market, but like just trading opportunities. But I really do think that this is a trader's market. You got to be nimble. If you can't be nimble, probably smarter to sit on the sidelines until you really see that all-out fear. I do think the stock market's going to go through the ringer again in 2023. It could even be worse than 2022. I do think crypto probably figures out a bottom, but that bottom will be unbelievably nasty for many altcoins. So people need to be really careful here. If Bitcoin's going to go to 9,000 or 10,000, where does that put 90% of all cryptocurrencies at that point? I think Ethereum will survive, hopefully some others, but just be really careful. Like, this isn't the market where you try to pick that number 350 on the Bitcoin list for a 10x, right? This is being conservative. Keep your money intact so that you can put it to use when we finally do bottom with whatever's left over.
VerifiedInvestingCrypto.com is your website. Tell people a little bit about that really quickly, Gareth.
Yeah, so Verified Investing Crypto is basically, there's a service there where I do a daily video every single day, 365 days a year. I basically put out trade signals when I see a good trade opportunity. I give you exact entry prices, stops, targets, all that stuff, percentage of portfolio. And it's my way of kind of guiding people through this bear market into hopefully the next bull, and still making sure that we're able to make money over this period. It's hard, but it's doable if you know how to read charts. And again, the daily videos kind of walk you through all of that stuff.
And you also have this website, inthemoneystocks.com. I had Nick Santiago, your partner, on this past week. So if you guys missed that video, check that out as well. Tell them about this service as well.
Yeah, so same format. My service under my name there at the top is called Verified Investing Alerts, and it's trade signals on stocks. We go long, we go short, we maximize gains, and then every single day there's a video as well where I go through all the intricacies of what the charts are signaling, the probabilities of every sort of move, how to position ourselves, and everything like that. So it's a great tool. I think honestly every investor should have it because of the amount of knowledge that I'm conveying in these videos alone, plus the trade signals.
And you guys use a strategy called PPT, which means Plunge Protection Team, right? No. No. Wrong PPT.
Yeah, so it comes from that, right? But it's meant for price, pattern, and time. Those are the three technical things that we've found are the most accurate in terms of analyzing charts. But you're right. I thought it was super cool when we came up with it because it was like Plunge Protection Team, but you almost become your own Plunge Protection Team because you can read the charts so well.
Yeah, no doubt. Well, Gareth, it's always a pleasure. Thank you for coming on again, guys. If you want to know more about Gareth Soloway and his services, or just follow him on Twitter, I'll have all that in the description of this video. And hey, that's it, man. I'm gonna have you back on after the new year, see where we are with things, Gareth. I really appreciate you and your time.
Thank you so much for having me, buddy. You're awesome. I always enjoy our chats, and I look forward to our chat in the new year.
I wish I think you were in Miami. I wish I could have bumped into you down there, but maybe another time.
Definitely.
All right, it's your boy Crypto Blood, and that's another Kick in the Session. Make sure you guys like, share, and subscribe, and we're out of here. Holla!